Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Monday. Stock market's back open. What are we doing today? Dow's up about 300. NASDAQ's up about 30. Little bit of a rally going on. Now, this is interesting because I do believe that the bears are still in control of this market. I do believe that we will head lower. Now, we got Fed Chairman Powell coming out on Wednesday, going to raise 50 basis points. Will that create a stock market rally? Will Fed Chairman Powell be Santa Claus? Will he deliver that Santa Claus rally? It's possible we bounce up a little bit from here. Now we're trading at 395 on the SPY. I could see us going up somewhere between here and 410. I don't think we're going to get above 410 before we get the big move downward. I think that the bears are still in control. If we get that Santa Claus rally, I do believe that that is a gift. And I believe the short sellers will be pouncing upon that gift because it's a gift to the short sellers, not a gift to the bulls. Okay, so that's my take on the stock market. Going lower, we may get a little bounce here first, may get a little bit of a Santa Claus rally, but the bears are in control and we're going to move lower. All right, before I get to the real estate market, I just want to talk about, well, I read articles over the weekend and sometimes they disturb me, sometimes I find them funny. Well, are you guys all okay? I got to ask, are you guys all okay with the federal government spending $38 billion to bail out the union pension plans? Are you okay with that? Now, personally, I'm not okay with that. Now, they're taking $36 billion out of the $1.9 trillion American Rescue Plan to bail out the union pension plans. Now, this is just the tip of the iceberg, and I think it creates a huge problem. Now, the pension plans in the United States are they're underfunded. They're underfunded by trillions of dollars, not just one, not two, about $3 trillion they're underfunded. Now, $36 billion, that's a drop in the bucket. I get that, a rounding error for the federal government, but it does set a precedent. Are we going to bail out all of these pension funds? Now, this is mostly related to the Teamster union members. They're getting a bailout. Now, I am a real estate broker. I do not have a pension fund. Now, why do I want to pay taxes to bail out the Teamsters? I'm not sure I do. Now, the first question I would ask is, where did the money go? Where did the money go? Look, they got a pension fund. They pay into it. Where did the money go? Okay, is it gone? Well, here's what a lot of pension funds are doing. They're investing in crypto. I can't believe it. A lot of people say it's not true. You can Google it. You can look it up. Look at the firemen retirement funds. They're investing in crypto. Police retirement funds investing in crypto. All right, now there's a big one. All right, out here in California, we have CalPERS. Okay, CalPERS say they don't invest in crypto. Well, they don't directly, but look at, they're one of the largest shareholders of Riot Blockchain, which is a Bitcoin mining company. Went from $100 down to $4. Are we going to bail them out? Is that our job to bail them out? Now, where did the money go? Well, they're making bad investments. Now, I'll be the first to admit the reason they have to make these bad investments is because they can't get a return on their money, because the Fed has kept rates artificially low and there's no way for them to get to 7% return on their money. But why do I have to come and pay for it? That's my only question here, and this sets a precedent. I don't know. I don't like the precedent that it's setting. You see, what happened is that these labor unions, well, they paid $27 million to Biden's campaign fund. Now, Biden comes and he's giving them a $36 billion return on their $27 million investment in his campaign. At some point, our government has got to stop being for sale. Now, I know that this doesn't make a lot of sense to me. Maybe it makes perfect sense to you, but we're selling out our government. Our government's for sale. Give them $27 billion, they'll give you $36 billion back. It's one of the best investments you can make. Now, real estate, we got a strong lobby. The National Association of Realtors, they get there and they lobby the federal government. And then the federal government, well, during the pandemic, they give us unemployment. And if we wanted it, they give us PPP money because we're in the real estate industry. The real estate and National Association of Realtors, strong lobby, they go and buy their part of the government. This is wrong. It's wrong. Look, I'm a broker and it's wrong. Okay, but it's wrong to bail out the pensions. And this is just the tip of the iceberg. The pension funds are going underwater, but they're going underwater because they're making bad investments. I don't think you want your hard-earned money going into the pension funds if you're a member of a pension fund only for them to go gamble it in the crypto market. I think it's wrong. Okay, and I don't think we should be responsible for bailing them out. That's just my little rant for the day. If you got a take on that, if you're okay with it, let me know in the comments. If you're not okay with it, also let me know in the comments. All right, let's get over to the real estate market. Now, the real estate market, Restoration Hardware, their CEO comes out and he says the housing market is collapsing. It's not me saying it's collapsing. The CEO of Restoration Hardware came out and say that. Now, okay, now he's not the only one saying bad things. Look at BlackRock. They come out and they say that prepare for the worst recession like you have never seen before. Now, you can't say depression, but that's really what they mean when they say a recession like you have never seen before. You got to prepare for it, and that's BlackRock, and they own a lot of these houses. Now, okay, so these institutional investors, they were coming out and they were paying all cash for houses. They were bidding against you and me in the housing market. And they're coming in with all cash. So their offers were getting accepted and they were buying them way up, way above asking price just so that they would get them. Well, now they got them, okay? But now they've disappeared from the buying market. They've gone away. They've completely vanished, okay? They're not buying houses anymore. They are out of the market. Now, they still own the houses, but I think they're going to start dumping the houses soon. So they went from this big buyer of houses to they're going to become this big seller of houses. This is the institutional investor, and it's going to cause a collapse in the housing market. Now, right now, when you read these articles, they tell you, they go, but Mike, rates are coming down. They were at 7.3%, and now they're at 6.3%. Everybody's going to start buying a house. No, they're not. Look, they're at 6.3%. We're double what we were last year at this time. At this time last year, we were below 3%. Now we're at 6.3%. All right, also, what's happened in the last 2 years? Well, houses, they went up 40%, 20% a year. 20% and 20% is 40%. So houses are 40% higher. Your mortgage rate has over doubled. People are not going to run out and buy homes. Look at, all right, a couple of years ago, the mortgage payment for the median home price, the average mortgage payment as a percent of household income was about 24%. 24% it took of your household income to make the mortgage payment on the median price home. Well, that number's doubled. It's about 49% right now. So it went from 24% of household income to 49% of household income. Now, this is not sustainable. It's just flat out not sustainable. The housing market has one direction to go, and that's down. Now, a lot of people think that, well, Mike, inflation's coming down now, so they're going to drop the mortgage rates also. Well, inflation, they say it's coming down. I'm not buying into it. Inflation goes like this. It's not straight up. It's not straight down, right? Okay, so it's coming down temporarily, but it will go back up again. Look, historically, right? Okay, if you had inflation going from 2%, which it was before, up to 9%, how long will it take to get it back to 2%? Historically, minimum 4 to 5 years. 5 years minimum to get it back down. And now there's no guarantee that it's going to come back down. I think it's going to continue higher. I think it's going to go past that 9% record price and hit double digits. Now I know it's already in double digits. Go to the grocery store if you don't believe me. I know you know it's in double digits. I'm preaching to the choir. But it's already in double digits. But yes, it's come down temporarily, okay? And now it's going to be heading back up. I'm telling you, we're going to get a hot print in the CPI number coming out this week. That's just a prediction. Maybe they get lucky and get it to go down, but I don't think so. I don't see it that way because the dollar's weakening, which is going to increase the cost of goods that we bring in from foreign countries. All right, so the cost of inflation is going to head back up, and that means that mortgage rates are going to also have to go back up because Fed is not going to pivot. Fed's not going to pivot. Not right now. It cannot. It cannot wave the white flag because inflation is still raging. Okay, and so this rally in the stock market is because everybody thinks the Fed's going to pivot. Look, this market is still controlled by the bears, and it's going to come down a lot lower when they realize that the Fed is not going to pivot until a much later date. Now, eventually, yes, they're going to have to pivot because they're going to break something. What are they going to break? They're going to break the housing market. I'm telling you, the housing market is going to break. It's already breaking. Restoration Houseware, housing market is already collapsing. Okay, BlackRock, who owns all the houses, prepare for the worst recession. The worst recession like you've never seen before. Look, we are in some tough times ahead, and it's not going to end pretty. Now, yes, maybe we get a Santa Claus rally going into the end of the year, and everybody's happy and we're all fired up. But I'm telling you, 2023 is going to be an ugly year for the stock market. And don't get me wrong, the stock market can have rallies, but in 2023, you're going to see a big crash at some point in the stock market, a big crash. And the housing market, it's just going to come down. It's going to come down hard. This is just my take. I don't want to bring you all the negative news, but that's just what I read over the weekend, and it gets me fired up. If you like this stuff, give me the thumbs up. Why not? It's Monday. Get out there, everybody. Have a great Monday. Bye-bye now.